How you guys doing today? We have lesson 26. So, you bought a loser. What's gonna happen? I think most times folks have red. Having red's completely normal. What's not normal or smart for a beginner is holding through it and praying. There's absolutely no spot in economics, no spot in stock trading for holding and praying. There's a big issue we're going to talk about during mental analysis where folks will really try and find validation and confirmation from others, and they make these echo chambers of where, like, hey, a bunch of folks online say it's cool, they're all holding, but they all end up losing, or what happens more times than not, the person who's really pumping it is already out or getting ready to validate and you're buying in. So we're trying to really avoid those kinds of issues. And so with this class, this whole entire lesson in itself is pretty simple because we don't hold losers. Sorry. I know that some folks like to hold on their losers. If you ever get caught with like a real big bag, we'll talk about that. But most times, from my experience, in my opinion, you have to have a stop loss, especially with swing trading, because there's always better chances out there, better opportunities. Holding a bag, to me, is mentally draining, emotionally unstable, and makes you really upset. And then economically, opportunity cost, what you could have bought, it really weighs on you. So again, I think even cutting your bags early and then watch them take off may be upsetting, but it's better than the alternative, holding them and then it gets worse. So today we're going to talk about, hopefully quicker than usual, why I don't hold bags, why I cut bags early. I'm always quick to get out of trades and then buy back in if I want to, but again, I never bag hold. I don't look into that as a smart thing. I don't do it. It's just not what I do. We're also going to discuss the difference between bag holding and long-term investing. There may be a year, 2 years, you really like a ticker that has massive long-term potential, but then it tanks for a while. But in the end, with your conviction in 10, 15 years, if you're holding it, you're going to be just fine. That's completely different than bag holding. It will differentiate the two and the mindsets behind the two today. And then lastly, we're talking about some statistics. Let's say you're coming to this class with some bags. It happens to all of us. I get it for sure, right? But if you have bags, what can you do? I'm going to show you some statistics today and what you need to put in your mental mindset. Maybe you can go from being like, I'm bag holding this stock, to like, hey, I'm now going to long-term invest, average down, play the long game, eventually get out of this hole and be just fine. Because the real problem is folks don't do the math. If you're down 50% in a stock and you're like, I'm just going to cut my money back, you got to make a 100% move back up to get there, right? If you drop from 10 to 5, that's 50%, but 5 to 10 is 100%. So cut into your bags. If you've never made a 100% trade, why are you going to do it now? You haven't done before. It doesn't make any mathematical sense, right? And more times than not, when you do hold, you'll get out of the hole eventually. Of course, if you buy at the tippy top peak on a dying stock, it may take more than a few years. But again, more times than not, you will get out of the hole eventually by holding. I don't like it, but it is the math behind it. You usually make money over a long period of time. After that, we're going to show you some examples. I think what's important for some people is that stop losses, they're going to hit quite a few before a stock takes off. Instead of not using stop losses, and we'll show you these examples, maybe refine where you want to put them and refine your plan and your edge. I think that stop losses should always be a part of your plan. When you act upon them, you can then say, hey, I have a 100% success rate because I executed my plan. If that plan means hitting a stop loss or a price target, whichever one comes first, and you act on that, that's 100% success, right? Every single time you act on that, that's what you should be thinking about. That's a good mindset to have. And we're going to show you how refining stop losses and loading zones and price targets, trying to find and work on those rather than cut out stop losses completely so you can catch runners, is probably the best bet, right? Cutting out stop losses makes no sense. We're not going to do that anymore. We're going to keep stop losses and be smart about that. I have some examples we're going to show you. So that being said, for this quick lesson, let's get into it. So this is going to depend strongly on your account size and your experience. If you were under the PDT rule, you do have a higher chance and a higher susceptibility to bag holding, especially if you do not plan your entries based off macro markets. If you just enter a stock because it's at value and it's like a falling knife and you enter and the stocks continue lower and then you get stuck 10% down, you only got 3 chances that week to get out, right? You can buy that same day and get out. But if you buy 5 stocks and they all tank, you're gonna have some bags into the next day. And so if you have underneath the PDT rule, I suggest finding some strategies that may work best for you. One that I really enjoy is buying around 3:30, 4 o'clock Eastern Standard Time when the markets are closing. Buying the night before is a great way to avoid the PDT rule. Most times, again, this is the only issue, is that most times, most stocks are not going to be extremely violent after hours. Now, if there's a fundamental catalyst that comes out, like if you were to buy an FDA approval play the day before and didn't know it, you may wake up plus 80 or down 80. You never know. That's why it's important to have fundamentals, right? So I think buying at 3:30, 3:45 when the markets have really calmed down and you have a chance, tomorrow at 7 a.m. you can sell just like it's a day trade. That's a great strategy in itself. The second, and what I usually prefer for people who like to day trade or have more risky plays who follow the PDT rule, have multiple brokers, for sure. What they don't tell you, what folks don't understand, is that the PDT rule sticks to every brokerage. If you have a Robinhood account, a Webull account, a Fidelity account, a TD Ameritrade account, and then maybe like a crypto one, whatever it may be, you have 5 or 6 accounts with $1,000, you can make 18 day trades. They're not gonna talk and be like, hey, this guy made 3 day trades, you should stop him. It's not how that works. And so if you were to have the PDT rule and you're afraid of risk management, having multiple brokerages is a great loophole in that system in itself. So again, if you're afraid of risk management, stop losses getting timed out the same day, multiple brokerages, or buying the night before or the day, late in the day before, letting it go overnight and hit you is a great way to avoid these kind of problems. Use stop losses correctly and safely. And again, that's a great little tip for you. I would use that if I was you. So I swing trade. The only chance I get to bag hold really is overnight. Again, I talked about that briefly before, but if you have a volatile stock, an AMC, a GameStop, a Bitcoin, whatever it may be, these more well-known stocks, not saying they're bad, but if you buy and hold overnight, the only real chance of a bag hold is if it plummets on you, which has happened. I've had some, like I think Rex was one, RENN once plummeted on me over after hours. It happens. It's part of the game, right? And that's why I've kind of developed some strategies mentally for myself when this does happen. It does suck. It does happen. But again, if you're swing trading, the only real risk you have is after hours. So again, remember that for the volatility, stocks still move, institutions buy after hours. Just make sure you're safe. So we can check out some charts soon. But again, the main goal of this small lesson I want to get through your head, you have to use a stop loss. Even if you're at work and you're like, I can just check quickly, set an alert in case it all goes off. You can then determine if you want to stay in it or get out. But from here on out, it's just what Peter Lynch said. A lot of beginners and a lot of retail traders cut their winners and keep their losers. That's what happens. A lot of folks are like, this is a good stock, I made some money, I'm gonna sell it. And then they have a stock that plummets, like, I'll just add more to it. Why wouldn't you add more to the winner and cut the loser? Why wouldn't you do that? So this is a huge problem. Again, from here on out, stop losses, at least an alert, you get out, you have a risk management policy, you cut it, no more bag holding after this point. It's done. So that's the main message of this small lesson. Secondly, which I discussed, was if you are bag holding, there are some statistics you have to think about before you cut or add to your position. It's really up to you. First, like anything in life, patience is a virtue. Almost every time when you hold, you almost always come out on green. The majority of times. There's no guarantee, but again, the majority of times you will end green more likely than not. What the statistics show on the return in the last 50 years, so if you hold for about a year, you have about a 64 to a 68% chance of going green. Now, if you buy at the top of the very popular tickers that are super volatile, you buy it right at the top and it plummets down, not really going to apply to you, right? But if you have a regular stock you just like and it goes up a little bit and it dips a little bit, with patience, 65 to 70% of the time, 64, 68, you will end up green within the year. That may be like, why would I wait a year? That's a long time. Well, if you're playing with $10,000 or $20,000 and that dips 20%, you may be holding, right? You may be like, I'll wait. The 5,000, 3,000, whatever you put in is worth more to me in a year than now. I'm not going to cut it and make it back, right? So again, the math shows, the time shows, if you do hold within a year, you have over a 60% chance of getting green eventually. The reason this is important is also for long-term investing. The statistics show you are near 95% likely to go green within 15 years. For some of you, you're like, 15 years is way too long. Yes, if you don't like long-term investing, that is quite a long time. But again, 95% of the companies that you buy right now in 15 years will be higher. It's just like